Right. Today we'll take the example, the problem related to labor variances. Okay, labor cost variance, labor rate variance, then labor usage variance. Right. The data given here is standard time 3 hours per unit. To produce 1 unit, you're taking 3 hours. And standard rate of standard rate of wages 6 per hour. Oh, this is not the problem. I'm sorry. Right, this is the problem. Yesterday we left. At least were you there for the formulae, labor variances formulae? Yeah, these are the three important formulae, three important equations. Okay, labor cost variance is equal to standard hours into standard rate minus actual hours into actual rate. Then likewise, labor usage variance is equal to standard hours minus actual hours into standard rate. Labor rate variance is equal to standard rate minus actual rate into actual hours. Look at this one. When it is usage, difference between hours, standard and actual. When it is rate, difference between rate, standard rate and actual rate. Okay, this is the rate. Now here it is the hours which is common. Here it is the rate which is common. Okay, so standard rate minus actual rate multiplied with actual hours is labor rate variance. Then there's an idle time variance, which is small variance, small ratio. Okay, that is calculated or computed by multiplying the idle time with the standard rate. You'll get it. That's easy. Right? In light of this, look at these equations. Agar chahe to take the screenshot. Okay, please take the screenshot and keep it aside. And with this formulae or equations, we'll crack the problem given to us. This is the problem. Okay, we'll try to crack the problem and fit this data into those equations. Okay, so that we can come out with the variances, labor cost variance, labor rate variance, labor usage variance, and idle time variance. Now, a firm gives you the following data. The data is standard time per unit, 2.5 hours. Standard time per unit, 2.5 hours. To produce 1 unit of output, you had to spend 2.5 hours. Actual hours worked, 2000 hours. Standard rate per pay. Standard rate is 2 rupees per hour. Standard rate, SR, is 2 rupees per hour. Okay, now 25% of the actual hours have been lost as idle time. 25% of actual hours. 25% of actual hours have been lost as idle time. Okay, actual output is 1000 units. Actual wages 4500. Actual wages 4500. You are requested to calculate all labor variances. All labor variances. Okay, now look at this. Recollect the formulae. Okay, what's the first equation? Labor cost variance. What is the labor cost variance? The labor cost variance is standard hours into standard rate minus actual hours into actual rate. Okay, that's labor cost variance. Now, what are the standard hours? What's the number of standard hours in this case? And what is standard rate? Look at this one. Look at this. The standard rate is 2. It's already given. Standard rate is 2. And standard hours are 2500. 2500. And from where did you get this 2500 figure? It is not given here, right? It is not given in the data. This 2500 is not given in the data. Okay, so 2500, how did you get it? Look at this. The actual output is 1000 units, and each unit is taking 2.5 hours, 2.5 hours, 2.5 hours. Okay, time it is taking. So 1000 into 2.5 hours is the total of standard hours. The total standard hours are 2500. And what's the actual rate? The actual rate, look at this one. Is it given the actual rate in the data? Look at this scan through. There's no actual date given here. Okay, there's no actual uh, rate given here. So you had to calculate. How do you calculate? What's the actual wage amount? Total actual wage. The total actual wage is 4,500. The amount of total wages is 4,500. Okay, and how many hours are worked? How many hours are worked? Okay, there are 2,000 hours you have spent. Okay, 2,000 hours you have spent actually. So 4,500 by 2,000 by 2,000. Quickly calculate and tell me. It is 2.25. 4,500 by 2,000. Okay, gives you 2.25. What is that actual rate? How did you calculate actual rate? The actual total wages by the number of hours worked gives you actual rate. Okay, per hour. This is per hour. Rate means per hour. Okay, per hour. This is 2.25. Okay, and how many actual hours are worked? 2,000 hours are worked. Okay, so standard rate to standard hours 2,500 hours, actual rate 2.25, actual hours 2,000 hours, idle time 500, idle time 500. Okay, idle time 500. Now, what is the labor cost variance? What's the labor cost variance? What's the labor cost variance? Look at this. Look at this. What's the formula? Can you recollect, or you want me to show you?
Standard hour into
Standard hours into standard rate, actual hours into actual rate. It's good. Yeah. So standard hours 2,500 into 2. Okay, into 2. Calculate and tell me. 2 into 2,500. 5,000.
5,000.
Okay, and actual rate into actual hours. Actual rate into actual hours.
4,500.
4,500. So 5,000 minus 4,500 gives you 500. The resulting figure is 500. What is that? Labor cost variance. It is not a negative figure, but a positive figure. Therefore, it's a favorable variance. The cost variance is favorable because the standard cost is 5,000, whereas the actual cost is 4,500. The difference is 500. Okay, 500. Done? Okay. Now let's come to the next one. Next one. What's the next ratio? Next variance? Labor usage variance. Labor usage variance is equal to standard hours minus actual hours into standard rate. Let's come back again. Standard hours, how much? Standard hours. Standard hours, 2,500. Actual hours, 2,000. Into standard rate. है ना? Into standard rate. Do you agree with me? Standard hours minus actual hours into standard rate. Okay, look at this. Standard hours minus actual hours into standard rate, right? The standard hours 2,500, actual hours 2,000 into standard rate. 25 minus 2, that is 500. 500 into 2. Okay, the standard rate is equal to 1000. 1000 is, am I right? 2500.
Yes, sir, 1,000.
Huh? Yeah, 1000. Okay, 1000 is labor usage variance. Labor usage variance. Okay, then then yeah, labor usage variance. I think this figure is wrong. Okay, then let's come to the next variance. The next variance is, yeah, labor rate variance, standard rate minus actual rate, standard rate minus actual rate into actual hours, into actual hours. Okay, standard rate is 2 minus actual rate is 2.25, 2 minus 2.25. Okay, 2 minus 2.25 is equal to minus 0.25. Minus 0.25 into actual hours 2000. So 0.25 into 0.25 into 2000, which is
Minus 500.
minus 500.
500.
Minus 500. Okay, minus 500. Okay, this is labor rate variance. Okay, it's not labor price variance, labor rate variance. LRV, labor rate variance, 500. Okay, by mistake it is typed 500. Then idle time variance. What's the formula for idle time variance? Idle time variance is equal to standard rate multiplied with idle time. What's the standard rate in this problem? Okay, it's 2. Standard rate is 2. And what's the idle time given? The idle time is 500. No? 25% of the actual hours have been lost as idle time. Okay, the actual hours are 2000, right? 25% of 2000, 500. Okay, 25% of 2000 is 500. 500 into standard rate. What's that? 2. So 2 into 2 into, yeah, 500 into 2, 1000. Okay, 1000. This is labor, I'm sorry, idle time variance, 1000, favorable. Okay, so this is favorable, this is unfavorable, and this is, this is favorable. This figure is by mistake, it is wrong. Look at this, look at this. So 15,000 plus 500, 1000 plus 500, how much? 1500. 1500 positive plus 1500 minus 500. So which is equal to 1000. Okay, which is equal to labor usage rate. Sorry, sorry. Yeah, this is labor cost variance 500, right? So labor rate variance, usage variance, and labor rate variance is equal to, is equal to labor cost variance, labor cost variance. Yeah, look at this. Here, this should have been 1000. When we calculated, this value is 1000, but by mistake, it is typed here 2000. Don't get confused. So in place of 2000, okay, please take it as 1000 because the calculation we got is 1000. So 1000 positive figure minus 500 negative figure gives you 500 positive figure, which is labor cost variance. Look at this one. Labor cost variance is equal to labor usage variance plus labor rate variance. The labor usage variance we got is 1000. Labor rate variance is minus 500. 1000 minus 500 gives you 500 favorable. That is labor cost variance. So therefore, when we cross check, our answers are correct. The typing is mistake. Okay, there is a typographical error. Ignore that and correct it in your notebooks as 1000 instead of 2000. Okay, done. Any questions in this problem?